Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The last week was marked with dollar strength, especially against the G7 nation currencies. This week seems to have started with a slight dip in the dollar, but there are various turmoils that have already started developing. Justin Trudeau, the Canadian Prime Minister, seems to be on the verge of resigning, and that's a political development we will be tracking closely. Apart from that, this week there are also key labor market data and Fed member speeches that should keep investors busy. Good morning, JK. What are the key narratives you will be paying heed to this week?
Good morning, Swaraj. Yes, we did see some snapback in the dollar index. Rather, I would say euro bounced back above 1.03 on Friday. I mean, this is like what I'm observing is that market has positioned itself for a lot of unexpected policy announcements from Trump and also the stronger US economy and a relatively weak economy in other regions as well. So the short term does look that dollar may be overbought at least in some packets, maybe against the euro. Of course, Chinese yuan is a different story because what we are seeing is a continuation of large capital outflows from China with their yields now going below 1%. The 10-year yield going below 1%, and there is expected to be more easing from Chinese central bank. So that's the reason the offshore yuan is trading more than 2.2% above the daily fixing by the central bank. So we don't know which will give in, whether the central bank will relent and let the rupee, let the Chinese yuan weaken, or the market will come and align with the central bank. So that is something we were to wait and see. So that has implications for the rupee as well, because rupee generally tracks the yuan fortunes. And if there were to be a relaxation by the Chinese central bank to let the rupee yuan weaken, then we might as well see the rupee also going towards the next resistance at 86 level. So what I'm watching, for your question, what I'm watching is how Chinese yuan behaves in the coming sessions, and how our own central bank reacts. But as far as India is concerned, we have seen the FII outflows return this month, and it's already more than 1.2 billion of outflows that we have seen. And there is no clear, a trend that has also emerged in the domestic stocks, because I think most of the markets are now waiting for two things. One is how the corporate earnings are going to be for Q4 of 2024, and then what is the likely announcements from the US new government that will happen after January 20th. And if there is any, much lesser serious announcements on the tariff or any other policy by the US government, then we can expect a sharp retracement in the dollar as a correction, definitely, because the US economy continues to be strong. Now, coming to the economic side of the US, we had some manufacturing report on Friday, which showed improvement, although it still remains in the contraction territory. It was quite conflicting because the orders were good, but the employment situation continued to be, somewhat weaker, at least in the manufacturing side. We also have a revision to the, labor data from the Bureau of Labor Statistics, the first revision that they will be announcing in the coming days, which market is looking forward to. What kind of, because last time we had a very sharp revision to the non-farm payroll data, but this time it's going to be the preliminary, and it may or may not be very big revision, but still the market will be looking forward to how what kind of revision that will happen. And of course, starting tomorrow, we have many inputs on the US labor data, the job openings data, the ADP private jobs data, and also the quits rate, and and also the weekly non-farm jobless claims. So in a fresh new year, when a big event is expected, market will not change the trend unless there is any big change is there in the economic situation. But we do see markets holding on to the ranges for some more time until the third week of January. But small consolidation is possible. But I'm more keenly watching the Chinese yuan and the reaction to it by the rupee. Thank you.
Thank you, JK. And just quickly summarizing, dollar index is showing a slight dip while euro is displaying some mild strength. But that story isn't holding for China, where fallen yields and capital outflows have been keeping the yuan weaker. That is an impact on rupee as well, because if yuan weakens, it could have an impact on rupee. And moreover, we are also observing $1.2 billion worth of outflows already this month for India, which should keep the rupee under pressure. Now, markets are also awaiting the inauguration day of President Trump, which investors will be closely awaiting, and of course, the any trade-related announcements that can follow post this event. This week is also having a lot of job market data. We have the non-farm payrolls. Apart from that, there are other indicators like the ADP, jobless claims, which will be released this week. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.